How to turn $8,000 into $325,000 tax-free for your child. So here's the steps. So you open a Roth IRA for your child. You put $2,000 annually in between the ages of 14 and 17, and let it sit until they reach age 60, assuming an average of 9% a year. That will equal $325,000 tax-free at the end from your $8,000 investment. And that will be a 3,968% rate of return. So let me explain this in a little bit more detail. So, okay. And when a child starts to work, right, of working age, you can open up a retirement account for your child, an IRA or a Roth IRA. I used Roth IRA because a Roth IRA is not taxed when you take the money out. Now, that's why I used age 14 to 17, because in most states, 14 is when you can start working. And, 17 is like kind of when you kind of phase out of high school, and now you're kind of going into the 18, you're an adult at that point. So, not technically my responsibility, just keep putting money into your account. So I did, if you put money in for 4 years, right? $2,000, which I think is a reasonable amount. Yeah, I didn't want to do something that was crazy, like, and there's limits of how much money you can put into an IRA anyway, right? And then, so how I got the 9% a year was that's the average for the S&P 500 over the last 20 years. So I think that's a very realistic expectation going forward. And that's like just S&P.